Good evening, everybody. Thank you very much for joining in. This side, Rahul Magan here as a Chief Executive Officer of Treasury Consulting LLP. And today we are going to speak about a topic which is gold. As you very well understand that markets are getting very volatile, dollar is getting very volatile, and sitting today, which is 26th August 2016, when we are speaking that today we are having a Jackson Hole, wherein Janet Yellen will tell his views about dollar, whether she is in a position to increase an interest rate or she is not in a position to increase an interest rate, and so on and so forth. But at the end of the day, we all very well understand that Federal Reserve is not in a position to increase an interest rate right now, considering the fact that the economy is not going very well, things are not pumping up very well, inflation is not very high, and we also understand that Japanese yen is in a big mess. And believe me, if Janet Yellen will said that, she is not increasing an interest rate by say December or probably by next March, then dollar will lose its strength. But not much, because of course when it comes to a theory called theory of safe haven, we have nothing like dollar. Dollar is the only safe haven currency we are having, so we are not in a situation that when even if Yellen will say that we are going to lose, the dollar will lose a considerable interest. So the chart which you have right now is from a financial terminal which has been bought by Treasury Consulting LLP, and this chart is for 3 years. We deliberately took this chart for 3 years because we wanted to tell you that this chart is we want to tell you that how the gold moves like. As you very well see that this chart is a candlestick chart, wherein you are having green green candles, and you are having the red candles. Now green candles means that things are moving up, and red candle means that things are moving down. Now if I take you here for a simple reason, if I take you here, now if you see that this is a green candle, 1 2 3, these are called 3 crows, right? Upside bullish crows. If I take you here, then these all are bullish crows. If I take you here, then you will see that you are the bearish crows. If I take you here, then you will get to know that you are at the bearish crows. Now gold is trading approximately 1332 right now, ounce per dollar. When we all understand that there is a lot of stress which is there on the foreign exchange market when it comes to the pricing of dollar and other currencies, and in fact there are a lot of speculation that in the market that whether the central bank would be able to maintain their status of quantitative easing or not. But at the same time, we would like to have this chart correlate with RSI, relative strength index. Now if you go down, if you look down, you will find a blue chart which is here, and in this blue chart we compare with RSI. Now see here, as you know that if you move up, it is 70 to 30. It means when it is greater than 70, it means you need to buy, it is oversold. When it is less than 30, it means you need to sell, it means it is overbought, right? Now if you see here, then RSI is greater than the line, and you know that gold is going up. Now if you look here, you will get to know that RSI is falling, that you need to sell. You need to sell here. You need to sell here, and so on and so forth. Now this is the chart of gold. Now let us change from weekly to intraday. Say 10. You can very well see how volatile the gold is. How much second it will take. How much second the chart will take to change. You can see that gold is currently moving higher. It is a mean reverting. Now this is all mean reverting, that you are here, now you was here, now you went there, now you went there, now you are here. This is all mean reverting. Now from intraday to, I would like to go at say daily. Now you can see this is again gold is very from here. See with RSI here, gold pumped up from roughly 1557 to now it is roughly 1300, and you can see that the RSI is telling you that it is complete buy. It's a complete buy. Yes, we would like to appreciate the fact that every trader is taking RSI of his own. Like you are having lot of traders who are saying that 70-30, there are people who are taking 40-day moving, 14-day moving average and all. Now take an example of here. What we do, we don't take 14-day moving average, rather we here change, since we are taking 3-year period, we will take 26-day moving average. Enter. Even if you take 26-day moving average, you will get to know here it is going up. RSI is giving a correct picture. Now this was all about gold, and the prediction of the Treasury Consulting LLP is having a strong prediction that the gold will go up. We are surely going to see a huge depression in the market very soon. In the sense, like if you move ahead, then majority of the corporates across the globe like Glencore, Aloha and HP, they all are facing a very big fall in their revenue. So I don't think that the upcoming time would be very suitable for them in regards like they would be able to make lot of money, because even HP, if you look at the HP result, you will get to know that they themselves said that the upcoming time is not good for us, and HP clearly said that people are not very bullish about their products. Apple too testing Apple Watch and others. So the corporate productivity is something that we need to check, and we need to carefully see something that is a cause of concern, to be very honest. Now what we do, we compare our chart with the DAX, not DAX. We will compare this chart with chart of gold with FTSE. Now see here, you will see a replica. Now in the red lines you have FTSE. You can see that you also know that FTSE, FTSE is Financial Times Stock Exchange. You know that it's all about London. We know that what did happen to Brexit. We all know that what did happen to GBP. We all know that how much volatility GBP is facing, and so on and so forth. Now if you carefully see this chart, then you would get to know that more or less this chart is in the replica. More or less this chart is in the replica, except the fact at the end, and not at the end. So this more or less this chart is in replica of DAX, is in replica of the gold. Now let us compare this with the Nasdaq 100. And what I do, let me delete FTSE first. Make it easy. Now you can see this clearly suggests that dollar strength. Nasdaq going up. 3 years ago, Nasdaq was up by 5% to 50%. See Nasdaq. So you can very well see the dollar strength. So even if today Yellen will not decrease in interest rate, dollar strength will continue. And I may not be very surprised that for a moment the GBP and Euro, Aussie and New Zealand dollar, which all four acting as a direct pair, they would get rise for a moment of time, and for rest of the period they would come down, and so on and so forth. They would come down. Now let us have one more test here. Let me delete these Nasdaq. Let us have one more test whereby we will do moving average. We will take rolling moving average, and we are taking 21 day is not a period. Let us take 26. Okay, enter. You can see the moving average. Rolling moving average, which is of 26 period. You have the gold chart, you have the rolling moving average chart. You can very well see that how these charts are, how this rolling average is going, and where this rolling average is suggesting you that gold will go up. So this was all about today. in this chart we wanted to show you that the gold is going up. Of course, we should not be disagree with the fact that gold is a highly mean reverting currency in the world, mean reverting commodity in the globe. By mean reverting commodity, I would mean to say that it is a kind of commodity which it is a kind of commodity which if today at the top it will went down very soon. If it is at the top it down, it will went up very soon. But one thing which I personally say as a corporate treasurer, that we should not forget that gold is absolutely a kind of commodity which takes years to make. Years to make. Gold is not like that which nature can make in a day. So I am a strong believer of the fact that gold is something. I am a strong believer of the fact that we should hedge gold. And if my information is correct, that China is a currency which is hedging a huge amount of gold. In fact, holding a huge amount of gold. And fortunately, if I'm right, that Chinese have already decided that 10% of their foreign exchange reserve would be of gold. That is a separate fact that there was a time when China was having $4.5 trillion of the FX reserve. Now they are having almost $3.2 trillion of the FX reserve, and majority of that goes because utilized because they wanted to protect the yuan. Because they did the devaluation of the yuan twice in the last year. And personally speaking, 1st October 2016 would be a very great day. In fact, October itself is a great day because China is coming up. Chinese yuan would be a part of SDR, and if seriously this would happen, then this would have a serious implications in the market, in the sense like of volatility, not negative implication. I hope all the traders are prepared for that. I'm not sure where the gold would go, but in my view, ideally gold would go up, because gold is a currency. Gold is not a commodity anymore, it's a kind of currency. We all need to wait and see how 2016 will move like, but one thing which is very sure, that 2016 would end up with a lot of lessons for central banks, for traders, for bankers and everyone. With this, I would like to thank you very much for your time in watching this video, and as you very well understand that Treasury Consulting LLP endeavor is all to upgrade the knowledge of our people every time. For that regards, we are having a brand which is Foreign Exchange Basic Thinkers. You are most welcome to join the brand, and you will get connected to LinkedIn, YouTube, Twitter, WhatsApp, Dailymotion, everywhere. And in that regards, you are also welcome to subscribe our magazine, which is a monthly version of the magazine. You're welcome to. We are continue to upload a lot of videos on YouTube. We are coming up with our website, and in this website, we are launching a lot of training programs. And believe us that, like today we are showing you the live chart. In the similar way, we are going to show you the live chart of a lot of foreign exchange currencies and all. With this, we thank you very much, and we'll see you soon. But before winding up this video, I would like to suggest one fact again, that commodities will face a very bright future, because commodities is something which is at very low right now. That is again an unfortunate part, that China as a central bank do not hold much money, and even if they hold $3.2 trillion of the foreign exchange reserve, they're really interested in spending this $4.3 trillion on their basically to protect the yuan, because October is very near. Thank you very much, and have a great day. See you soon. This side Rahul Magan from Treasury Consulting.